Both Airbnb and DoorDash have already boosted their IPO target ranges this week as demand appears strong for the last big listings of 2020. And like Bob was just saying, if you combine IPO and SPAC volume already this year, even before these, the $130 billion raised is the most since the dot-com bubble. What's this telling us? For more, let's bring in Dan Gallagher. He's the tech columnist at the Wall Street Journal for Heard on the Street. Dan, it's great to have you, and I know you have really good specific thoughts on the merits of Airbnb relative to DoorDash, but as a first blush reaction, is this anything to be concerned about in terms of the volume of money that's being raised in the IPO and SPAC market this year, or is it a healthy sign?
That depends on, I guess, where you sit on the investment. I think with IPOs, we're seeing definitely a kind of rush to get things in the end of the year. I mean, what's interesting about it is that all this is taking place in the background of this pandemic that has caused so much economic damage overall. But the markets seem kind of, resilient or even ignoring what's going on there. So I think if you're a company that's seeing on a potential offering, I understand the reason to try to get out now because investors seem to be willing to take it.
Right. And we've seen some really high valuations in the likes of Snowflake, some companies that don't really, their business model IPOs with some of the SPAC offerings, that kind of thing. But everything's being taken to very kindly right now. Is there anything you'd warn investors about? I guess not so much with the offerings this week, but, are there... Or is it just obvious? I mean, the people who are betting on some of these SPACs and kind of big idea businesses obviously aren't coming through the balance sheets because they don't exist.
Exactly. And I do think people should be careful about that. We seem to be in this market where caution is really, tossed aside. And I think but it's hard to say, like, when does it get to a point where investors start realizing, oh, wow, this is super risky. A lot of these risks are pretty apparent to people who are going to read, do some simple reading on the documents. I think Airbnb and DoorDash both are, big, well-known businesses, obviously. So I think there's probably some degree of comfort with that one. But when you get into a lot of these like SPAC deals or other companies where a lot of people haven't even barely heard of them before, but they, see some upward numbers in on the income statement and then just buy. That's definitely a risky position.
Yeah. So let me ask you about Airbnb relative to DoorDash. If you had to put the Gallagher family fortunes on the line, which one would you choose?
Well, of course, I can't make any investments at all. But, I felt Airbnb was in a better position because, the problem with DoorDash is they're going out at this time when their business, as it is enjoying this huge boost in demand, obviously from the pandemic. People can't dine out, takeout and delivery is about the only way to eat out unless you're cooking. And that's obviously not going to repeat. That's going to be over sometime next year. Airbnb, by contrast, is going out at a time when, right as the pandemic has really damaged its business, but it's also shown the certain resilience to bounce back quickly. And so I think as a whole, Airbnb's got more potential for future upside than DoorDash does right now, because I think when DoorDash gets out sometime next year, next year's financials are not going to show the kind of growth they've been seeing, because that would be, I think, impossible.